Hey guys, welcome back. In this video, we are talking about the institutions quietly buying AMC, the billions of synthetics, AMC's path, and many more in this video. First, we're looking at this. People keep saying AMC is dead. Meanwhile, the biggest institutions on Wall Street are quietly loading up. You take a look at this: Vanguard plus 16.1%, BlackRock plus 11.5%, Bank of America plus 44.6%, Goldman Sachs plus 38.6%. And so what this thing we're seeing right now is that they are not selling, they're accumulating. The difference is retail holds with conviction, whilst Wall Street buys quietly in the background. So I want to break this down because this is a very big clue to what actually is going on behind the scenes. Firstly, when we take a look at some of the institutions involved, now we know that very likely as we see companies like Vanguard and BlackRock increasing their stake, it is very possible that they are doing so to also lend out these shares to other institutions because they know there's a high demand for it. But the focus on here is the two other companies such as Bank of America and Goldman Sachs. Now, the reason why I say this is because Bank of America, and what we've known with their relationship with Citadel, is understanding that the majority of their loans in terms of Citadel's loans are from Bank of America. They are their prime lender. And so for Bank of America to be lending so much money to Citadel, who are then shorting AMC with that money, and now we see Bank of America buying AMC, you should already see what that implies. And we've talked about this, how we're seeing institutions recently are really trying to hedge into AMC, are trying to protect themselves from what's about to happen, as we're seeing them buying more and more shares of AMC and trying to prevent, the inevitable from happening. We also can say the same for Goldman Sachs. So Bank of America is only helping certain institutions short AMC. They're not directly short AMC. However, Goldman Sachs, they are a company we've seen in the past who have took up short positions of AMC, both through shares and put positions. We've seen them spoof AMC. But now we're looking at them taking an entirely different stance where we're seeing them closing all of their short positions. So publicly, they don't have any shares short, they don't have any put, they are lowering AMC and having calls of AMC. Once again, publicly, because very likely is that they have billions or millions of synthetics behind the scenes that they're not talking about, as we're still seeing them spoofing AMC. But this should already show you something else as well, which is if the previous short sellers were willing to now to go long on AMC, you should understand what that means, and you should understand how that shows AMC is obviously showing its projection, is showing its potential. And once again, this is all done with them quietly acquiring in the background. You can see when Goldman Sachs were extremely against AMC, they were very vocal about it. When any other firms were extremely against AMC and they were shorting AMC, you could see how vocal they were about it. But now, the very moment they are long AMC, you can see how quiet it is. You wouldn't have known this if you're not someone who keep up to date with the filings. You won't know this if you're not watching the videos. But before, if you looked at anywhere, these news articles, they're all talking about how these firms are shorting AMC, yet when they're long AMC, we don't see these articles talk about it. And so this is what we've said with the fact that they want to do this quietly because they've realized it's a massive potential. You can also see a big reason for why this is. From this exact date, since 2021 till now in 2025 on AMC, it's been 1,223 trading days. If we kept the same low volume of 30 million shares, that would mean over the course of 1,223 trading days, 36 billion shares have been traded and switched hands. That's a low conservative number, not counting high volume days above 30 million. That means if price was suppressed for 5 years, 36 billion shares as a low number was sold to retail who bought. So this stupid narrative about CEO Adam diluting another 500 million shares is absolutely nothing compared to the 36 billion shares sold to retail that are naked short. So once again, I want to break this down because I have different opinions about this. Now, firstly, we have to realize the dilution of 500 million shares is something that has not yet been done. We have to understand the difference between the issuance of shares versus the authorization of shares. When you allow the authorization of 500 million shares, it doesn't yet mean there's been a dilution of 500 million shares. It is until those shares are then issued will there be a dilution. So that's the first takeaway we have to get from here. So people who are right now, just already screaming about the dilution, you have to understand that that is very different from authorization. We've already talked about the pros and cons about it, so I don't want to break it down too deeply. But another big thing is, now, some people will have different numbers. And personally, for me, 36 billion, like we've said, we don't have any data that can actually prove it. What we have seen with the data, which gives a very strong conclusion on how many synthetics there are, have been things like swaps and tokens, which we talked about. Now, with that, what we have seen is that there are at least 2 billion synthetic shares just with the swaps. And so even if we're not using the 36 billion, because to some it may seem like a ridiculously high number, to others it may seem something that's extremely plausible when we understand what's going on, but we have to realize is that the synthetic shares are in the billions. So even if Adam Aron were to issue and dilute 500 million shares, you have to remember it won't allow these naked shorts to cover, because the shares that have been created, the synthetic shares that are out there, are in the billions and not in the millions. And that's the biggest thing we have to take away from here. You see, 36 billion shares of naked shorts to the AMC. ABEs are hedged with derivatives, with payment for order flow market makers. And so we've already talked about this. When you take a look at everything that's out there, you understand how the synthetic shares are in the billions. Of course, you may believe it's 2 billion, you may believe it's 36, you may even think that it's 100 billion. There isn't something to tell you guys whether you guys are right or wrong, but we've known that there are, just so much synthetic shares that are out there. Now, furthermore, you also have to look at the path for AMC. So we've talked about how the authorization of shares would allow AMC to be put in a better position. But even without that, you have to understand how AMC is already going to do extremely well and why firms have been quietly trying to buy AMC. Because you can see they are on a realistic path to profitability with key drivers. Firstly, expanding premium formats and to boost ticket revenue. Now, everything they're doing right now are things that have been backed with data. When you take a look at IMAX, when you take a look at Cinemark, when you take a look at AMC, what you will see is that actually a lot of their premium screens are the biggest money earners, or the one that's bringing the most revenue, are the ones that are attracting the most attendance. And so with AMC focusing on expanding premium formats, you can already see how that's going to allow AMC to grow. They are increasing concession sales through upgrading menus and bundling. Once again, this is something we've talked about, how AMC is very efficient. And you have to realize, recently AMC's earnings was something that was done with a decrease in attendance, yet we were still able to see an increase in revenue. So this is what we talked about, how we are extremely efficient. Streamlining operations for lower cost and higher efficiency, refinancing and managing debt to reduce interest expenses, capitalizing on box office recovery and exclusive content deals. And so this is a big thing for AMC, and it ultimately is just showcasing why AMC has huge potential. You have to realize that yes, we are in a different position than Cinemark right now. We've already talked about how Cinemark has talked about a buyback program, has talked about increasing dividends, which we hopefully see that one day AMC will do, but it will take time for us to get there. However, AMC has an even bigger potential, because while Cinemark boasts of a 900 million revenue, AMC is at 1.3 billion. So there's such a big disparity in the revenue. And right now, all it takes is for us to be able to transfer all of that revenue into profit. And that's how you'll ultimately see AMC grow. And so for me, what I can see, why I believe in AMC is because of how much potential. It's because of what we're able to do when we get to that stage. And on the other hand, for the short sellers, is that you're seeing them struggle. 4.9 billion for the reverse repo ending on the Friday. We've already talked about this. This is desperation. Every time we see this closing down, we're suddenly seeing a massive injection of revenue. However, we've known that that is done because the banks, the institutions are screaming for help. And now, because of this, because as we've seen it closing down to zero, we realize that they won't be able to get the help anymore. And even if they were to see injections, this is something that won't last forever. And that's only more money that they've put into this, which inevitably will then be transferred to the A's. We've always said this, however much money they're putting into suppressing AMC, when they can't suppress it anymore, that will be money that's transferred to the retail. Now, as always, on this financial advice, so do take out a grain of salt. Make sure to do your own due diligence and research, and I'll catch you guys next time.